I had a buyer whose monthly payment jumped almost $240 right before closing. Not because of the interest rate, not because the price changed. Insurance. There's one thing about home insurance in Kansas City that can blow up your deal completely, even on a house that passed inspection with flying colors. And most buyers don't find out until it's almost too late. If you're buying here in 2026, this video could save you thousands. Keep watching. What's up, everyone? Welcome back to Living in Kansas City. I am Payne, your local real estate agent. I work with buyers and sellers across Fort Leavenworth, Kansas City, Olathe, Shawnee, Basehor, Parkville, and Platte City. And I make it my job to tell you the things most agents skip over. Today is one of those conversations. We're talking about home insurance and why it has quietly become one of the biggest threats to your buying power in this market. Not the mortgage rate, not home prices, insurance. By the end of this video, you'll know exactly why costs have surged, how it shrinks what you can afford, and the hidden claim trap that has blindsided some buyers weeks before closing. Let's get into it. Here's the reality no one tells you at the open house. Kansas and Missouri sit on one of the most active hail corridors in the entire country. Insurance companies have paid out billions in this region over the last few years. Hail damage, wind damage, roof replacements, water intrusion, billions. When payouts go up, premiums go up. That's not an opinion, that's math. And it doesn't stop there. Insurance isn't based on what you paid for the house. It's based on what it would cost to rebuild it. And right now, labor is up, materials are up. A roof replacement costs dramatically more than it did 5 years ago. So even if home prices level off, and they have in some areas, insurance doesn't automatically follow. It's tracking a completely different set of numbers. On top of that, carriers are tightening their guidelines across the board. We're seeing higher wind and hail deductibles, age restrictions on roofs, cosmetic damage exclusions, and fewer insurers willing to write policies at all in high claim zip codes. Some of the older neighborhoods in Kansas City, Shawnee, and Leavenworth are feeling this the hardest, which brings me to the roof conversation. If you're shopping in Olathe, Lenexa, or Shawnee, a big chunk of the inventory was built in the 90s and early 2000s. A lot of those homes are on their second or maybe even third roof. Here's what this means for you as a buyer. If a roof is 15 years or older, your insurance premium can jump significantly. Some carriers will only cover it at actual cash value instead of replacement cost, meaning if it gets damaged, you won't get enough to fully replace it. Others won't write the policy at all and require replacement as a condition. Buyers used to obsess over granite countertops and open floor plans. Those things still matter, but if you're not asking about roof age on every single home you tour, you are leaving a massive variable completely unexamined. And that leads to the part of this video I really need you to hear. Insurance claims don't just follow the homeowner, they follow the house. Let that land. When you go to insure a home, insurance companies run something called a CLUE report, Comprehensive Loss Underwriting Exchange. It's a claims history tied to the property address, not the person selling it. So if the previous owner filed 2 hail claims, a water damage claim, and a sewer backup in the last 7 years, that history is sitting there waiting for you. The seller moves on, the record stays. Here's why that matters. Multiple claims in the past 5 to 7 years can mean a significantly higher premium for you. It can mean higher deductibles. It can mean carriers refusing to insure the home at standard rates or at all, forcing you into specialty markets that cost even more. And the brutal part, you don't find this out at the showing. You don't find it out at inspections. You find it out when your insurance agent pulls the report, sometimes a week before closing. I have watched deals get delayed over this. I've heard of buyers scrambling to find coverage at the last minute. I've seen monthly payments jump by amounts that completely changed what someone could qualify for. And there are buyers who had to walk away from homes they loved, not because anything was wrong with the house itself, but because of what had been filed on it. This is real, it happens, and it is almost entirely preventable if you know what to look for. Let's pull real numbers on this. Take a $400,000 home. A few years ago, insurance might have run you around $1,300 a year. Call it $110 a month. Manageable. Today, I'm regularly seeing quotes come in at $2,400, $2,800, sometimes $3,200 or more annually on that same type of home. That's $200 to $270 a month, a difference of $100 to $160 per month compared to what buyers were paying just a few years ago. Now, stack that on top of property taxes, HOA dues, and maintenance, and your effective cost of ownership looks very different from the list price. Here's the thing most buyers don't realize. Lenders use your insurance premium when calculating your debt-to-income ratio. A higher premium means you qualify for less house. It's not just about your budget feeling tighter. It literally changes what you can borrow. So how can you protect yourself? Here's exactly what to do. Step 1, ask about claims before you make an offer. Ask the listing agent directly, has there been any insurance claims filed on this property in the last 5 to 7 years? If the roof looks newer than the house's age, ask why. If you see signs of past water intrusion or storm repairs, ask what was filed. You're entitled to this information and a good agent will get it. Step 2, get insurance quotes immediately after going under contract. Not eventually, immediately. The day you're under contract, contact your insurance broker, give them the address, and have them pull the clue report and run firm quotes. You need to know what insurance actually costs on that specific home before you're too deep into the process to pivot. No surprises on payment, no scrambling at closing, no changing your debt-to-income ratio with 2 weeks to go. Because here's the non-negotiable. Lenders require proof of insurance before they fund the loan. No insurance, no closing. It's that simple. Kansas City is still one of the more affordable major metros in the country. That's genuinely true, and it's one of the reasons people keep moving here. But the era of low, predictable ownership costs, it's shifting. Between insurance increases, property tax adjustments, and the real cost of maintaining an older home in a high weather event region, you have to underwrite the full cost of ownership before you fall in love with the list price. The purchase price is the starting point, not the whole story. If you're buying anywhere in the Kansas City metro, Parkville, Platte City, Basehor, Lansing, Olathe, anywhere, and you want a realistic breakdown of what your true monthly payment looks like, including insurance, reach out. I'll connect you with local lenders and insurance agents who run these numbers up front, so you're making decisions based on reality, not assumptions. If you're a homeowner and want to know what your home is worth right now, there's a free home value link in the description below. And if you're thinking about moving to the area, or maybe you just received orders for Fort Leavenworth, set up a 15-minute discovery call and let's start a conversation that will help you make an easy move. Thanks for watching, and I'll see you soon.